So with that, I'm going to go introduce Chris Lamoreaux. She's going to dive into our housing market locally and tell you what's hot and what's hot.
So I'm the second to last speaker, and I know you can't wait, like I can't wait for The Economist who's coming up next. So I will go a bit quickly, but rest assured, all of these slides, they'll be on our symposium website. So if I go a little quickly, you can get all of the information there. So housing market, let's start with California. The number of transactions was up 5.9% year over year, and the sales price in California was up 5%. Days on market, of course, down 17%, so only 32 days on the market across the entire state. But the good news is that California's price has increased 7 months in a row. So you can see, obviously, the low point being the Great Recession, and it's just on a great trajectory northbound. So we're all appreciative of that. But it still is not at the peak price of $900,000 it was summer of 2022. Also, the number of sales are starting to bounce back in January, thankfully, but you can see on the far right of your screen that yellow is January, the blue is 2023. Still, our number of sales way low compared to all the years going back to the Great Recession as well. So inventory is super tight. That is our biggest challenge. Of course, sellers are sitting on the fence still, and buyers have the affordability challenge. There's just not enough inventory, otherwise the sales would be there. So yes, in summary, that 788 is still under the 900,000, but it has been increasing. Number of sales in transactional is starting to increase, so we're hopeful that with the news maybe of interest rates changing, that will get sellers off the fence as well. And now going to the county level, you can see that it's at 500,000, and that's up year over year from 490,000. And the number of sales are up slightly as well at 1,071 from 1,023 prior year. So with 47 days on the market and the list to sold ratio, we do watch that as well, of course, because this is telling us what prices are actually going for versus what they're listed for. But you can see on this graph, the blue bars are the sales price, and the black line is the number of transactions. So obviously, the story is the same as California. The number of sales have been trending down due to lack of inventory, but the median sales price is holding there. And you can see this is I know it's probably hard to see all of this data from this graph, but this is the amount of inventory based on the sales price of the home. So you can look at that in detail on our website as well. This is surprising, probably, that still 30% of the homes are selling over ask price in our county. So this is by county, but you can see 30% for San Bernardino County. And again, sales in February were up year over year by 4.69%. But very low inventory. The median sales price up to $500,000, 2% year over year. And new listings, of course, showed a gain of almost 5%, as well as days on market, of course, dropped due to that lack of inventory. We're just turning them over quickly. And let's dive into the high desert, our favorite market. Let's take a quick look at Barstow. As Jared, I think, mentioned earlier, they've had a banner year, 17% year over year in their sales price increase. And Jason says his graph looks like an EKG. Watch these. They are all over the place. But the Victor Valley also saw a 7.2% year over year sales price increase. And you can see price per square foot also showing the same trajectory up since 2021. Of course, we've had some dips, but overall, price appreciation. Active listings, the opposite. That inventory constraint, we just need more houses to sell, whether they're resales or new home builds. We're there. We have buyers. And the big EKG, transactional volumes. This is the volume, and this next slide is the number of sides. Just unfortunately decreasing due to that inventory, the same story. But so in a nutshell, high desert region down 24% in our inventory. Last symposium, I was crying about being under 1,000 homes on the market. Now we're under 800 homes, although I think just in the last week or so, we're popping over that. But we have good, strong buyer demand, just not enough inventory, of course. And so the sales numbers are just not there. compared to prior years. But we are at 415 as of last month. It took a slight dip from January, which was 420, but still not bad off of our peak of 426,000 from summer of 2022. And equity, though, is the big picture. I think is the big takeaway, especially because in the high desert, in the Victor Valley, certainly lots of equity has been gained over the last few years. But look at Barstow, 100,000 since 2020, and Phelan, 130,000 since 2020 as well, and even more so in the Victor Valley. So here's a quick update by city. And Adelanto, you can see on the left-hand side of all of these graphs by city is 2023 February versus 2024 February. As you can see, increase in sales price. You're going to see the similar story. Few more sales, maybe on some cities, but list to sales price ratio close to 100%, and days on market decreasing in each of these. So here's Apple Valley at 420,000 versus 378 last year. More sales as well, days on market down. So you can see a similar story. So won't repeat myself, but you can see 275 is where Barstow ended at. 29 sales over 22 of snapshot February to February. And Helendale up also, just slightly, 352. Hesperia up quite a bit at 455. And 30 days on the market, they actually had an increase in their market, days on market. But this is a snapshot, so sometimes the number of sales that we have in that month skew it. And then Phelan up tremendously, 475, and they had a 162% increase, February 8 sales 2023 and 21 in 2024. So it probably was an anomaly in February 2023, though. So we look at all the numbers, but we also want to look at the overall story that it's telling throughout the years. And you can see prices are going up in every market year over year. And we would be remiss to not talk a little bit about the REO market. Everybody, sometimes, the headlines try to scare us, but there is no fear. We are still way below the historical average on delinquencies, and you can see here the equity. If you take the orange, which is the amount of homeowners that own their home free and clear, and in blue, 28% have at least 50% equity in their home. So 67% of Americans have either more than 50% or larger in equity in their home. So there is no fear of a big REO flood. Of course, any homes that come on the market, we're going to sell quickly. Because there's that buyer demand. And thank you, Chicago Title, also for tracking our local Victor Valley NODs and REOs. You can see, it's as low as it can get, right? So we're proud of that. We have no fear of that in our market as well. And just a reminder, you can see home ownership gives tremendous wealth. So people always ask us, when is a good time to buy? And you think just because we're realtors, we're going to say now is always a good time to buy, but it truly is. 40 times the net worth of a renter is what a homeowner has because the equity that you build over time. It's not a commodity. You buy your house, it's your home, and over time you're going to build equity. So now is always a good time to buy. But key takeaways in conclusion, of course, so the pricing, the number of transactions, and the listings are slowly coming back from 2023, starting at the end of 2023, finally seeing some traction on that. But we remain to have such a tight inventory here in the high desert, and that will continue to put pressure on the sales price, of course, supply and demand, and mortgage rates, of course. We'll see what Dr. Thornburg says next, but we're hoping that it will come down a little bit just to stimulate the sellers to get off the fence and buyers to have a little bit more affordability. And again, equity is always gained through homeownership, so call us if we can let you know about your individual markets, but we have a lot of details on our monthly housing report, or check it out, of course, on the symposium website.